Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up. And this is for a pretty wild trading day, Thursday, June 3rd, 2021, just getting on to 6:30 p.m. Wow. I warned traders that going through today and tomorrow, and I said today's the warm-up for the big report in the morning. But today you had challenger numbers, ADP come out. We had non-manufacturing numbers coming out. The only part of non-manufacturing that wasn't good was the employment part. But ADP saw big jump. Challenger cuts a little bit more, about 2,600 more cuts than they had the other time. But it's all going to be about tomorrow. And it's not going to be just the number. It's going to be how the market interprets the number. The market was set off kilter in the month of April when we got the, actually it was I guess the month of May, just at the beginning of May, when we got a wild number out of the jobs report. And that number, they were looking for 1 million jobs, new jobs. They got 266,000. It shook the market. Well, tomorrow we go in something similar. The market whisper number is 670,000. We only had 266 last time. Are they going to make revisionments to the 266? You never know. What is that going to do? What if the number comes out at 300,000 again? What if it's 1 million? So traders are all trying to figure what will the Fed do with that set of numbers. I don't think it's based on any one report what the Fed will or won't do. They want to see traction in jobs, and they're getting it to a degree. It's just not fast. We're seeing more workers. We're seeing that a lot of people with the help wanted, there's signs everywhere if you go out into a city, literally everywhere, but you have to motivate the people to want to work, and that isn't easy when they're still getting state checks and federal checks for certain jobs. Not everybody can live on that money. We all know that, but there are people that do. So for the service industry, it's very, very important. For the retail industry, if you go into stores, they don't have enough help anywhere. So I see it in Chicago, I see it in the restaurants that you go out to, and everything's getting back to normal. Officially, Chicago on June 11th, we're at what we call our level 5. We have no restraints on it at all. So that's just Chicago. What about the rest of the country? So as we take a look, you get to something like ARK. We've had a heck of a nice bounce in their tech stocks that have picked up, and now they're getting a correction. As you know, higher interest rates for tech stocks are the enemy. They require a lot of capital. So that's what you're seeing. When the market's breaking like this, you have lower highs now, lower lows. That's a downtrend. The market is over the 18-day average, so the bias is up. So what do we have? It would not surprise me that we have a market that's captured by the 200-day average. When it went there, I told you, I thought it was going to have trouble. And then it pulled back, and I think it's going back to the 18-day average. And I think that's where you're going to be stuck, between these numbers. But a close underneath 106.86 will turn the trend down, which it is, the bias down. If it fell apart, 99.38, the lower Bollinger Band, could be another target, and momentum has just rolled over on you. You do realize this chart can change like that depending on what this jobs data report shows. So please understand it, give the market a breath, let it catch itself in the morning after the report, then you take a look. Now, when the stock market opens, we've already been crazy in the futures market, right? And we know that there's the other part of the stock market where you can trade these that are not on the exchanges, the off exchanges, and we see it all the time. GameStop, nice rally, but again contained by the upper Bollinger Band. So as crazy as all the events and so on and so forth, you still pay attention to the chart action. I know a lot of people get carried away. They don't believe that. When we get to the AMC, you'll see what I'm saying. The trend in PAVE, I expected trouble. We got it again. You got under 26.29 to 26.22, and you're just stuck in this pattern sideways. Now we have another statement from the White House that the meeting today between President Biden and Ms. Capito went well. They're talking, I guess that's well, and they are going to resume talks this coming week. It has to be fairly fast because the Democrats want to push something through, and the president's leaving for the NATO summit to meet with Putin, to meet with, it's his first big trip abroad. We'll see what happens. Speaking of President Putin, you do realize Russia today said they're thumping everything. They're not letting their wealth funds invest in anything with U.S. dollars attached to it in any way. Okay, it really hurts. I'm being funny. They don't have many U.S. dollars. What do we buy from them? AMC. Higher lows, higher highs, thrown right back to that Bollinger Band. Pretty wild. I said yesterday here, said, if I were the president of AMC, I'd probably be dumping my stock. And I said, I laughed. I said, I don't know what he could do. Well, he did better than that. I give him all the credit in the world. They filed to sell almost 12 million shares of stock. Let's assume they get $50 a share. And they're going to do 12 million. What is that, $700 million? That's an awful lot of debt they can pay off. Of course, they're diluting all the shareholders, but they'll be able to survive, hopefully, as a company and figure out whatever their business is. And I don't think they have any idea what their business is. But this proves that Wall Street, the know-it-alls, they're not the know-it-alls, the me people. Boom, just take it away from them. XSD, the semiconductors, okie dokie. So here's a market with an embedded reading. I think the pros bought today. Yeah, today. As you can see, this is how you finished. I think they had their opportunity. I think they'll bail tomorrow if you have a reading under 79. And I think they're looking for the market to go back to the combination of 182.14 to 183.27. In PODEX, this is the area that I'm looking for the market to run out of momentum. The combination of a 100-day average and an upper Bollinger Band is powerful. Does that mean you go short? No, I could be very wrong. The trend is up. We're not blind. We see it. It's not embedded. It's overbought. It has every reason not to hold as a chartist. ESGU stepped out of the trend. You could embed by Monday or Tuesday. Both numbers were over 80 today. Both were over 80 yesterday. And on the day before, they weren't. That's why I said I got to get through here. And by Monday, we could have an embedded reading that gets exciting from the long side. Then you start looking, if you got that, where the Bollinger Band tops, you're looking at that whole arrangement. In the energy sector, you're overbought as can be. You're fighting at the upper Bollinger Band. I'll let somebody else be smarter. Why? The odds of staying over those bands 5% of the time. I want to be with the 95%. That market can pull back. Is it a buy when it's overbought? I don't think so. That doesn't mean I'm right, but I don't think so. The emerging markets. Embedded reading. I think the world wants to be long these emerging markets, and I think they're right. So it's a question, as you can see, an uptrend. How do you come in? Do you wait on the jobs data? What do you do? If you're a subscriber of mine, I'm explaining that in the mornings to you. Now, gold lost its embedded reading, and it lost it by a lot. You're down to 72. I think the pros bailed on any longs they had on this, and they'll sit it out for a bit and let the market restructure itself. That's what I think happened here, and I think the same identical thing in the gold miners. So I think this wave to the upside ended. Now the question is, how much of a correction do you get, and what does the report tomorrow tell us? Are we going to have stiffer inflation, lighter inflation, a lot of people getting jobs where the Fed makes a move, not as many as the market was hoping for, the Fed gets pushed back? I'll wait. After tomorrow, I've got another 30 days before the next Fed, one of these jobs data reports. Plenty to do in that time. TLT. You have the trend down, the bias up, and momentum turning down. This obviously, if interest rates go up, this generally pulls back. FXE. On the euro, the market rolled to the downside today, and you can see starting to push in. Maybe it's going to target the 113, 112.89 area. Trend down, bias down. You broke the back of the market for the moment, and you put it all together. A lot of fun. Now, one of the things that I like to do is teach. If you're a regular viewer here, you know that. In my new course, the Enhanced Bollinger Band course, one of the best things I've done in many, many years, could be one of the best I've ever done. It's simple. It's 13 chapters, each about 7 minutes long. I explain what the Bollinger Band is. I don't teach the Bollinger Band. I'm assuming you know what it is, either from my course or other things. But at that point, now how do you use it? What moving average do you use when a market locks in? And how do you buy these pullbacks as long as you've got two elements going? You've got the Bollinger Band right in front of you, and you've got an embedded reading on the slow stochastic. You put it together. I show you how to do it. I show you the number I believe in. Will every trade work with it? It's a guarantee not. Guaranteed that it won't. If that's what you're looking for, nobody can do that. But I think you're going to see a way into these markets, and I think you're going to go, whoa, that's not so difficult to look at. Let me see how many of those I see in these other charts. All you do is go to the website under the word education. The course is there. It's not expensive, $75. No money at all. I think you'll get a kick with it. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.